Hello, welcome to Countdown to the FAFSA 30 Days, 30 Ways to Maximize Financial Aid Eligibility. I'm Latanja Muhammad, founder of College Cost Cutter. Today is November 4th, day 4. If you're just joining us, check out the description below for links to videos to previous content in this series. Today we're going to talk about SAI income reduction strategies. So just as a refresher, yesterday we talked about this SAI or Student Aid Index and how the colleges use it. They apply a simple formula based on their cost of attendance minus the SAI, which equals the demonstrated need for the student. We ran through an example of a student having an SAI of $12,500 and looked at two colleges and what the demonstrated need would be based on the formula. We learned that the lower the SAI, the higher the demonstrated need will be. And so understanding that if we have a higher demonstrated need, that will be more need that the college has to look at to fill, then we want to do everything we can to reduce our SAI. So let's look at some strategies to do that. So remember, the SAI is calculated based on parent and student income and asset information. And so today we'll look at income reduction strategies that may assist your family in reducing the SAI. One strategy could be to postpone bonuses. If you are in a position to say, I'll take my bonus in another year, I'll defer it another year or two, or however long you can defer a bonus, that will help to keep your income lower for the tax year that you will be reporting on the FAFSA. Another way is to reduce salary. So for business owners, this is important because business owners have the opportunity to say what their salary will be. And if it's feasible for the family, then this may be a strategy that can help reduce SAI during the tax years that will be reported on the FAFSA. Delay retirement distributions. Again, if you are not in that period of time where your distributions are mandatory for retirement accounts, then you do have the option to delay receiving those retirement distributions, and that will help to keep your income lower during the tax years that will be reported on the FAFSA. Increase charitable contributions. We already know that this is a great way to reduce income, reduce our AGI. And so if we're in a position to do so, we can increase our charitable contributions and lower our income. Also, we can hire our child. So this is covered in more detail in the College Funding Playbook, 7 proven methods for funding your child's education without breaking the bank. You can order the playbook at the link shown, and it's also available in the description. And there are also other AGI reduction strategies, and you're strongly encouraged to talk with your financial advisor about some of these strategies and what your expectations and goals are to align your retirement goals and saving goals with planning for college. So another important thing that we need to discuss, which we'll get into tomorrow, is the base year. And that base year will be the first year that is reflected on the taxes that will go into the FAFSA when the student is a senior in high school. And that year is usually 2 years ahead of graduation year. So we'll talk about base year tomorrow and some of the important things that you should do. And part of this income reduction is part of what you should do during the base year. We'll get into more of it tomorrow. So thank you for joining today. Please like and share this with others who may be interested or need this information. We will be back tomorrow. We'll see you day 5.